Hey, good morning, class. Welcome in. We're going to start a unit now that's going to reflect kind of more macroeconomics. We're going to start taking a look at GDP, inflation, deflation, all the things that are going to affect a nation. So follow along. We're going to get into this. And we're going to start out with what we call national income accounting. Okay? So national accounting, GDP, and NDP. So a measurement of the national economy's performance is known as the national income accounting. This deals with the economy's overall output and income. 5 major statistics are going to be used to determine a nation's economy. These include gross domestic product, net domestic product, national income, personal income, and disposable personal income. So let's take a look at GDP. You may have heard of this one before. So gross domestic product. This is the total value of all goods and services produced in a nation in a single year. To measure value, economists use the dollar as the common measure. So we use the US dollar to measure across the board, whether it's UK, whether it's India, whether it's Japan, we use the US dollar to measure this. Now, GDP is only looking at the final value, and doubling up on goods counted cannot occur. Also, only new goods are counted. Used cars, old refrigerators are not counted in the final GDP. So the new goods that are created in a calendar year, everything that is produced, that's what's going to count as the GDP. Okay? So here's a list of our 2018 GDP examples. So the United States leading the way, as you can see, and that's actually in trillions. So again, we're looking at tons and tons of money involved. United States is first, China is second, Japan is third, and you look at other developing nations like Ghana, 73rd, Honduras is at 109th, and then you have Tuvalu, which is a very small nation, at 186th. So again, this is kind of what we look at when we measure a nation's economic performance. So how do we count GDP? Well, to compute GDP, economists are going to use 4 economic categories. First, they're going to use the consumer sector. So these are goods or services that are bought directly by the consumer. So what you and I buy at the store, whatever we purchase, that's factored in, okay? We also have what we call the investment sector. So business purchases of items used to produce other goods. So these are business purchases. Then we have our government sector. These are goods and services bought by the government. And lastly, we have net exports. So the difference between the nation's imports and exports. So what we're bringing in versus what we're sending out. Whatever's left, that's what we call the net export. Okay? These are determined in a nation's GDP. Now we also have something called net domestic product, or the NDP. This is the loss of value because of wear and tear to capital goods. So, and actually that's depreciation. So let's make sure we pull back on that. So depreciation basically means that if I buy a brand new car in 2021, by the time it hits 2023, 2024, 2025, it's going to depreciate in value. Okay, that's just the law of the matter here. So we have a situation where over time there's wear and tear, there's rust, there's things that are going to occur to that vehicle that's going to depreciate its value. Okay, net domestic product, we're going to look at the value of a nation's total output minus the total value lost through depreciation on equipment. So whatever's being produced, but we also have to subtract what's being depreciated. Okay, that's what we look at for an NDP. Now, we also have what we call national income. So national income is the total amount of income earned by everyone in the economy. So this income comes from 5 different sources. They include wages and salaries, income of self-employed individuals, so those that are running their own small businesses, rental income, corporate profits, and interest on saving and other investments. So this is where everything's kind of factored in. And again, what is the average national income? That's how we determine it. We also have what we call PI, or personal income. This is total income that individuals receive before personal taxes are paid. So our PI is before we go into tax week, okay? And then we're going to finish up on our last slide here. We also have other measurements of income. Let's talk about transfer payments first. So welfare and other supplementary payments that are basically state or federally run by the government, these are transfer payments. So these are kind of that economic assistance that's used for folks that need that help. But we also have DPI, which is disposable personal income. So this is income that's remaining for people to spend or save after all taxes have been paid. So when you pay your taxes, this DPI, whatever's left over, that's at your disposal. You can use your money. That's that cash money that you want to have. That's what you want to use, and that's what we call our disposable personal income. Okay, so kind of an intro here to GDP and other measurements of income. We're going to take a look at inflation, deflation in our next discussion, but I hope you folks have a great day, and I will see you guys later. Okay, bye everybody. Have a good one.